Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's a daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A bearish engulfing pattern yesterday and a long black Mariboso. Not the hardest of patterns to construct, as the previous session was an indecisive spinning top. Anyway, prices dropped back down through the important 50% Fibonacci line of the January 2021 to March 2022 move at 92.75, plus pierced and closed within the small congestion zone between 91.61 to 91.89. I've repeatedly said that there are elements of the December 2021 to date action looking like a bearish bump and run reversal top. I recently explored this line of inquiry and found that the drop last week had reached down to the projected target level on the downside, so that any further attempts lower would not be directly related to this pattern, but as a follow-on lower from this pattern. So far today, a lower open and a test to the bottom of the small congestion zone, 91.61 to 91.89, before a reactionary move back up through the 50% Fibonacci line at 92.75 and up to almost yesterday's open, before pulling back down to the 50% Fibonacci line. I'm wondering if perhaps those who sold yesterday may be thinking whether it was such a good idea as it first seemed. LME 3-month aluminium. A significant bearish black crow yesterday. Now, leaving aside the idea that it was part of the past 4 days being an attempted bearish 3-line strike pattern that didn't quite work out, and I could discuss that idea at length. Anyway, leaving that aside, the range and action of yesterday spoke volumes. You see, the previous session was the first close above the combination of the March to date downtrend as well as the upper time of the March-based bearish shift pitchfork, currently both at 28.08. And prices tried to move higher into the congestion band, 29.07 to 29.74, which has within it this very slowly rising long moving average, currently 29.69. Well, prices rose up into this congestion band but were rebuffed, enough that the market dropped down to the broken but still significant May 2020 to date broken uptrend, currently at 28.24, and closed just over it and below the upper time stroke downtrend combination. Thus, we have not had a second consecutive close above this upper time stroke downtrend combination, not yet. This means the secondary target X1 in the 23.71 area for the previously mentioned March to April descending triangle pattern, the harder secondary target X1, well, that is still operational. The primary target X in the 27.35 area had already been reached. So far today, a strange piece of work. The market's edged up and out of the upper time stroke downtrend combination, supported as it is by the broken May to date uptrend. However, the market does not seem willing to try up towards the overhead congestion band between 29.07 and 29.74. Indeed, the market currently looks like an inverted hammer pattern, which is not the most ideal pattern if you're looking to move higher. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.